Hello and welcome to The Chart Show. I'm Victoria Scholar and this week's three charts are Tesla, Bitcoin and Mulberry. Shares in Tesla surged 8% after the electric vehicle giant on Monday asked shareholders for permission to carry out its second stock split in 2 years. In August of 2020, it gave shareholders 5 shares for every share that they own. The potential stock split comes as a welcome development for retail investors who may have previously been priced out of Tesla's quadruple-digit share price. Another 5-for-1 stock split would be a win-win by improving accessibility to this stock, as well as expanding Tesla's pool of potential investors who may like to be part of this irreversible shift towards electric vehicles. Meanwhile, the broader US tech sector has been on the rebound, with Tesla leading the charge. Let's take a look now at the chart of Tesla because you can see that this month it has enjoyed strong gains since the trough, with a series of green candles since the 15th of March. Prior to that, the stock was under pressure, suffering from lower lows and lower highs since the peak in November. The stock has recently broken back above key resistance, turned support at $1,000 a share, and looks potentially as though it could be on track to hit 1,100 as the next major resistance hurdle. Above that, the next resistance is the peak from the start of the year, which is just north of 1,200. A break above might set the stage for an extension of the recent uptrend. Bitcoin reversed its 2022 declines this week, reclaiming highs not seen since December. Since January, the low, it has rallied by more than 35%, with gains accelerating in recent sessions, staging 7 consecutive sessions of gains as bullish momentum gathers pace. The next major resistance hurdle is the psychological round number of 50,000, with a break above potentially paving the way for more gains. Risk-on sentiment has provided a tailwind for certain unloved assets this week, like tech stocks and cryptocurrencies, which are now potentially coming back into favour among investors as confidence grows. Bitcoin hit a record high back in November of 69,000 before shedding almost 30% over 24 days. Taking a look now at the chart of Bitcoin, you can see that since the January low, it has been regaining ground off the lows, with gains accelerating in March. It broke back above its 2022 peak and is on track to test 50,000 as the next level to watch. However, it is still about 45% below its peak from November when the sell-off began. Clearly, this asset has scope for sharp moves in both directions, and while there is an upside bias for now, that can quickly and easily turn around. In terms of support, 45,000 is the next major support level to watch on the downside. If we were to break below, arguably Bitcoin could head back down towards those 2022 lows. This week, shares in Mulberry jumped after it said that full year 2022 revenue and profit should come in moderately ahead of current expectations, with strong trends in the 6 months to September expected to pave the way for more strength in the final half of the year. In this notoriously fast-moving industry, marketing and ad spending are critical when it comes to attracting fickle fashionistas. Mulberry's strategy to rebuild its brand awareness post-pandemic should help drive gains for the bottom line, with its strong sales trajectory in the first half. Mulberry has skillfully navigated supply chain uncertainties by stockpiling in Somerset, and is also focused on attracting deep-pocketed customers in their domestic Asian markets who are now shopping at home, while international travel remains subdued. High-end fashion brands like Mulberry also have the benefit of being able to pass on some of those inflationary cost increases to consumers in terms of higher prices without considerably dampening demand. Let's take a look now at the chart of Mulberry, because before this week's jump, the stock had suffered heavy selling in March before sharply reversing those losses. Taking a longer-term view, we can see that a lot of the price action of the last year has been confined to between roughly 260 on the downside and about 330 on the upside, range trading. After a downside breakout in March, it was swift to re-enter the range. Although we have seen the stock gap higher in a bullish indication for its outlook, it has another 6% or so to go before breaking above resistance at around 326. If it can push and hold above that level, then we could see further upward momentum lead to gains towards 340 and even 360, particularly if the recent broader market bullishness is maintained.